Hey everyone, Double P here. So welcome. In this coaching call, what we are going to be going over is the state of the market as we can see it right now. Screen. Let me just get my trusty tool up here so we can have that going. So if you're ever wondering what's going on in the market, you guys know that we're in a bear market right now, and it's also we're in a little bit of a bull rally and a bear market. So a lot of people, a lot of traders are trying to navigate this market to see what's happening. So what I tell you always do is look at ETFs in this market. Particularly, let's look at the SPY because the SPY is based off of futures. So when we come over here, just come over here, you see here that I got the SPY up. Or let me see here. I should have the SPY up right there. I do. Not too sure why it wasn't showing. Oh yeah, I see why it wasn't showing. Let me move my thing down there. Okay. So if we're looking right here, and actually let me get this out of the way here. No, I'm going to leave that up there because that's my flow chart. So let's have a look at the SPY here. And right now I'm on a 1 day, 5-minute candle. So you see the date up there. Actually, you don't. Yeah, you see the date up there. This is August the 12th, 2022, as I'm recording this coaching call. So I'm just looking at what the SPY did on the Friday, how it moved. Now this has been a little bit of a rally. So what I want you to do is, there's a couple of different indicators that never, ever, ever lie. Like price action lies, the charts give you a different story. So I'm going to give you two indicators right now that will tell you the whole entire story. So let's go over the money flow oscillator. Because money flow oscillator and volume. So money flow oscillator is the transactional notional value of is money flowing into or flowing out of a stock, and it's showing you the volatility of the money flowing in and out of the stock. And let's go volume flow indicator. Volume flow indicator is the share value. So it's the amount of shares that are going in or out of a position, right? And it's not based on notional transactional value, it's just based on notional share, amount of shares that are going in or out of a stock. So it tells you are institutions and hedge funds and money managers, are they pushing money into the stock or is money flowing out of a position? So that lets you know to see whether or not there's bearish divergences or bullish divergences, which means if it's a bearish divergence, is money's flowing, the price action's going higher, but you see money flow or volume flowing out, that tells you that institutions, hedge funds, money managers, they're all getting out of that. They're all getting out of that position while retail is trying to get in. So they're dumping their shares little bit by little bit because they don't want to, excuse me there, I got a little bit of a sniffle. So they don't want to be in a position, right? So that's a bearish divergence. A bullish divergence is basically the actual position, like the price action. Maybe you'll see something like the price action is going lower, as you see here, but then you see the transactional value and you see money flow and volume flowing into a position, right? Whereas in the price action is low. So you see it starting to come up here, right? And you see, so that's just an example of a bullish divergence. So when we're looking at the overall marketplace, I want to show you what I'm looking at. So I'm looking at the ES mini. So I'm looking at, sorry. So I'm looking at the ES mini. That's going on a high right now. That's on a high. I'm looking at the NQ, right? And that's going on a high. What you see right here is you see my 200 and you see my 20. So I'm looking at my slope of my 200. I'm looking at the slope of my 200 on this positions and on the 20. And you see what's happening is the position is just hugging. The slope is going higher. Where's money flow and where's volume? Well, money flow and volume are at the peak at the top. Money flow oscillator is starting to peak out here, but this is still bullish because it's above the zero line. So let me show you here. Let me compress that down a little bit so that you see that there. So this is above the zero line. Anything above the zero line is bullish. So this is above the zero line. You see the zero line right there. That's still bullish, even though it's coming down, so that you can see a little bit of a bearish divergence with the money flow oscillator. But you see how it's curving over here. So that's telling you the 20. So this is the 20 and this is the 200. So it's starting to curve over here, starting to go negative because it's no longer green. So that's why you see that the money flow oscillator is starting to turn down this way, but the volume is still, now the volume is flattening out, which means the volatility is starting to flatten out. So we watch this. So this is all for tech. So we watch the NQ, but in the ES mini, you can see right here that it's starting to uptick and the volume is starting to raise up just a little bit, and it's above the 200 and it's above the 20, hugging the 20 really nicely, right? So then I look at the financials, right? So let's come over here and look at the financials. And you see that the financials are top ticking out as well, right? Financials are in a bull run. Here's the 200, it's sloping up positive. The 20, it's hugging the 20 right here, price action. On the money flow oscillator is just starting to turn, but it's still highly bullish, right? And then the volume flow is still very, very, very bullish. So we come down here, so it's above the zero line, and we see it's at the top of the liquidity because I have right here, I have volume flow profile up, and we're at the top of the band now for liquidity. So right here now, this is almost performance chasing, right? So what else do we look at? Well, I look at the VIX. The VIX is flattened right out now. It's at a 19 handle, so it's flattened right out. So that means that means volatility is getting crushed out of the marketplace. That's why stocks are going higher. We look at the bonds right here, right? Once again, the bonds are starting to flatten out as well. When the bonds flatten out, stocks start to peak, right? So we look at that. Whereas the bonds here on the money flow and on the volume, well, right now it's bearish. It's under the zero line right here, so it's bearish, tilting down. This is on the zero line, but you see here it's starting to top tick down. That's why the bonds are flattening out, right? Here's a 200 and here's a 20. They're starting to converge, so we'll see what happens, right? And then I look at the industrials right here. This is a very, 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 I look at the industrials as a very important piece of the marketplace, because this basically lets me know what's moving, right? Is the economy on the ground moving? So this is all freight, this is all rail, this is all moving, right? Transportation, right? So we see what's going on there, right? And then this is energy up here. Energy took a pop. So I look at all these different sectors, so we can come back over here and we can look at what's going on with the SPY. And we see right now, so we see money flow oscillator, right? So let's have a look at this. The money flow oscillator is tilting, but it's above the zero line, so this is going to be considered still bullish. The volume flow indicator is under the zero line, so it's considered bearish, and it's just starting to tilt up. So we see the 200 here has flattened out and starting to curve a little bit of positive, and this is the 20. Now the SPY is hugging the 20 and it's above the 20, so it's really kind of bullish. So let's look at this now. I'm on a 5-year, 1-day chart. So what do I want to do? What do I want to map out? Well, the first thing I want to map out is I want to come over here to Fibonacci retracements, and I want to go from the reactionary high to the reactionary low, right? To see exactly what's going on, to see where this stock, where the condition of the market may be. So 218.26, 218.26, and 479.98. 479.98 right there. Okay, so let's have a look at this now when it comes to Fibonacci retracements. So let me move this over here so that you can see it a little bit clearly. So where are we with Fibonacci retracements? Well, with Fibonacci retracements, now we have, you can see right here clearly, this is what's considered one of the golden means, right? 38.2%. So it retraced back there on a 5-year, 1-day chart. It retraced back there. So it hit it. So that was support. This is basically support and resistance. So you see it right here. That's support. Bounced, support. Resistance, 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 right? Broke through support, support. So this line here, which is 380, is basically, that's the line in the sand over the last, what is that now, over the last year or so? It's been bouncing off of that level. So let's come over here so that I'm a little bit more accurate with this. This is, how many times does this bounce off this level? Broke through, so this was last year, the 21st. Bunch of resistance zones. So let's draw out. Let me draw out here. Volatility box. So that zone right there. So that was from December the 17th, 20 up to March the 11th, bounced in that zone. So we can mark that out. That's our volatility box. And then we can come back here again. And look at this zone. Right here. So this has been from June the 12th up to July the 16th, so just about a month. Bounced in and out of that area, the 381 or the 380. So that's volatility, price action. So that's what you want to see in that volatility box. So what are we doing now? Well, you can clearly see right now that we are going in an uptrend, right? So here's a 200. It's red. Now it's turning yellow, so it's starting to flatten out. Here's the 20. It's hugging the 20. So let me move over here and open this up a little bit more so you can see the candles. And then what we're doing is, so this would be a good short position because we're on a daily time frame. So if it's under the 20, we kind of want to take a short position where you could have took a short position there, but it came right back to the 20. So this would be like literally like a day trade or an intraday trade, right? If you're looking at it on Swing term, right now I would never do swing trading, but you could possibly do swing trading because here was under the 20, right there. So that would be considered a short. So right there would be considered a short too. So those 3 days right there, that would have been considered your short. If you wanted to get short, you could have done a swing trade there, right? Because you're looking at how the 20 is hugging the price action, right? And then you see here, this would be a good swing trade on the top end, right? Those 3 days right there, which is what we're in right now. But you see that the money flow oscillator is starting to tilt down right here. Volume is starting to come in. So this is why we do intraday trading, because we don't want to be holding positions too long because you don't want to get burnt, right? So you want to be able to map out and understand what's going on with the marketplace. That's why we're doing intraday trading, right? We're scalping for now. Now you could do day trades, absolutely. So what's the next thing that I want to look at is where would this particular stock go? Well, based on Fibonacci retracements, you're looking at your trap door. So we're at 427 right now. So if the stock was to tank, you're looking at it reversing or retracing back down to 380, right? Now, if it was to continue on its bull run in a bear market, where would be the next price point position? Would be 479. Now, that's a big movement, right? So if we're looking at that, we're at 427 right now. That's a $50 move almost, right? That's what you're looking at. Well, let's come over here and see how much does the SPY move. Right, so let's come over here. Let me get this built out here. A $59 move would give us how many days? How many days out? That would give us approximately, that would give us 138 days. So almost, if we're in a bear market, plus or minus $56 in 138 days. So let's look at that. That'd be going into December. Oh, that's 52. I mean, we're splitting hairs here. So that's coming into January, that the options market is depicting the SPY to move plus or minus $56, right? Now, would you want to take a position right down here? Well, I mean, you're paying a pretty penny for this particular stock to move, right? So if we're looking at 479, we're looking right around this area here, 399, right? To be buying a position, right? So that's 159 days out, plus or minus, right? So that's what the position would be worth. If you want to know what this position would be worth 30 days from now, or 7 days from now, or 8 days from now, well, very easy for you to figure that out. So on 399, 159 days, what we drop down is to, let's just drop down to 30 days, which should be right around here. So what's the 479 worth? 39 days from now, right? So we come over here, 479, 480, be worth 3 cents. Now, is that a position that you want to be taking? Probably not that far out, no, right? So you kind of want to be looking at that and saying, I don't want to think I want to be going out that far, right? Let's look at 479 out here, right? Well, what are we looking at, right? We're looking at a penny, right? Do you want to be buying penny options? Not really, no, because look, there's no volatility, everything's flat. That'd be a waste of a position. So what you might want to do is to extrapolate, is to come back over here and say to yourself, okay, well, what does the SPY move every day? Well, let's look at the position of the SPY, right? Let's come over here, option time and sales. Oh, sorry. Let me open up the chain here. So in a position like this, you want to look at it on a day-to-day basis, plus or minus $3.68 that the SPY is supposed to move in one day, right? And what do the market makers say? The market makers say it's supposed to move, oh, sorry, I'm at the August the 15th. So I don't want to be August the 15th because we're already past August the 15th. Let's go to the 17th. No, let's go 5 days out, sorry, to the 19th. So in the 19th, which is 5 days, we're looking at plus or minus $7, right? What is the average true range of the SPY? So how do we find that out? Let's come over here. Let's come over to the charts. And we'll come over here to, we'll add a study. So let's remove all these other studies I have right here. And we're going to add average true range. Average true range lets you know what the average true range of a stock is on a day-to-day basis. So we'll leave that there and just apply it. So you'll see what the average true range of a position is. So let's come out over here and let's take this on a, we'll go on a 5-day, 1-day chart, right? So what's the average true range, roughly, of the SPY over the last 5 days? The average true range has been about $6. So from the top end to the bottom end, right? The average true range of the SPY has been moving anywhere from $6, right? You can see it right here. The average true range here was $6. Here was $5.74, $3.42. So we look at the average true range. This is from the top end. This is from the opening to the low to the high and the range. It's all combined together. So literally, it's on averaging roughly around $6 a day. So it's generally pretty accurate. So we come over here. If you want to take a position 5 days out, it says $7.64. So I look at that and I say, okay, we know the average true range of the position is roughly anywhere from $5 to $7. So on the 17th, on the 19th, what are we looking at as far as position? How far or how much money are these stocks or so these options worth? Would I want to come down here and take positions down here? I probably would. Absolutely. So let's look at it. Right? Because we're in a bullish trend, right? And still in a bear market and a bullish trend. But do I want to go out and pay this much money right now for these positions? The answer would be, for me, would be no. I want to come down here to the shorter dated options because we're in a bear market, but we're in a bull trend right now. I kind of don't want to be hanging in a position for too long intraday. So let's go. We're at 427. So let's come down here to 427. We're moving approximately $5. So on a day like that, I want to be looking at taking a position here, plus or minus in a bull trend. I would like to see taking a position roughly around the 33 delta mark. So the 33 delta mark is 421, right? Is 141 for the ask, 139 for the bid. Do I see a lot of volume here, a lot of open interest? I do. So I would come over here and I just want to verify. So let me clear out this Fibonacci because I want to show you how I work through my methodology in this particular market. So let me get rid of Fibonacci. Let's clear that out. And let's come down here. I can do 1 year, 1 day, because I want to show you the next tool that I use, which is going to be the channel tool. Because I want to clearly see this channel. So how does the channel tool work? So we take the channel tool from the higher lows and we just slice it all the way through, which would be right here. And I've already got the extensions on, so it's going to come, and I take down this low right here. So that's the first channel. So you can clearly see that we're in a downward trend, but we're in a volatility box. It's stair-stepping down, right? So you see here, it's clearly within this channel. So this is the lower low of that, and this is the higher low of that channel, right? And you can clearly see here we're stair-stepping down or ski sloping down, right? When did it break out? Didn't really break out of that channel. So it broke out there 1 day, which was right here, and it broke out and it stayed right there. So let me open this up a little bit more so that you can see it. We'll make that a little bit bigger so that you can see that channel. So as long as you're within this channel, you could have took a long position on the short side, shorting all the way down and getting out right around here, right? This would have been your position to get out of right here because it stayed within that channel. Now, how easy or how hard is that to know? It's kind of hard, right? So what do? Let's move this over here. Let's clear that channel. And let's build a new channel. So a new channel would be right here because we're seeing a different trend, right? So we can start this channel right here. And that would be our new channel. So let's open that up so we have a look at and see what's going on with that channel. So you can see this channel right here is sideways action, right? So it broke right here, it started right there, that's on the low, right? And then the SPY just bounced off of that low. You can draw a little line right there. That's support, right? So we're trading back and forth. We moved up a little bit, didn't move up that much, moved up a little bit. That's resistance right up here, right? But it's still within that channel. You can clearly see it right there. You can draw it out yourself. Resistance. Right there, and support right here, but staying inside of that channel. When it breaks out of that channel, now you know we're going to be in a new trend, right? So when did we break out of this channel? Right here. That was the day we broke out of that channel, right? So let's get rid of this channel. Let's remove that drawing, and now we're going to build a new channel because we broke out right there. So let's come over here from the highs, so these are lower high now to higher lows to right there. That's one side of the channel, and the other side of the channel is right here. So now currently we are in our new channel. So what does that tell me? Let's move over here so that you can clearly see it. Oh, let me break this down here. So let's have a look at this new channel right here. Here's the money flow oscillator. We're starting to tilt down. We're above the zero line, right? So this is still bullish. This area is still bullish. Where are we on the volume flow indicator, right? We're underneath, but the slope is starting to come up. So shares are starting to come in. Money is starting to come in. Sorry, volume is starting to flow in. So volume of shares are starting to flow into the SPY. That's why you see this upward momentum action. Where's the channel? Here's the channel. This is the lower end or the bottom end of the channel. This is the top end of the channel, right? We've broken through that resistance, right? But we're bouncing. Where do we hit here? That was the top end of the channel. That's support across, right? So it hit that top end of the channel, tapped it again, tapped it again, tapped it again, tapped it again. So what price is that? Well, we come over here and look at that price. That price is 412.94. So over the last since let's see here, that would be from July 13th to August the 11th, that's been support. It's been the 412 area, which has been support, right? So it broke free. So now it broke out of support. So it broke out of that level right there, the 412 level, and now it's moving the last 3 days, right? So we're in an uptick. So look at the 20 right here. Look at the 200. The 200 is starting to turn. Now the slope looks like it's flattening out. So if it flattens out, what we could possibly be doing is this could possibly be hitting resistance. This could be the next resistance point. So let me draw this out here for you. And let me use the price tool so that you see it. This could possibly be the next resistance point because we could trade from 415 to 427. We could trade back and forth in this channel, and this could be consolidation, or it could break out, depending on what the money flow oscillator does and the volume flow indicator. So now, this week coming up, we have to watch what's going on with the SPY. So what kind of position could we take in this particular zone right here, knowing that here's the upper end of the channel, there's the lower end of the channel. Well, we know if this breaks the lower end of the channel, where are we going to go? Right back down to 415 to test 415 and either bounce and break through, which would put us back into a little bear position, or it could hit right here to 427 and bounce and break out and move up, right? As long as it stays within this channel, we could see this happening, right? We could see that staircase type of position happening, right? So we mapped out the Fibonacci levels. So let's look. Let's come back over here. Where would be resistance points? Well, we see a lot of resistance right here, tapped. So let's draw that out. That's 449. We see support and resistance right here. That's 437. So let's open that up because we can see clearly support and resistance right here. Support broke through, right? Broke out, hit resistance, broke out, and then came right back down. Support, resistance right here. So these could be our next particular price action levels. So as I'm looking at this and mapping this out, I'm coming back because I'm on a 5-year. Sorry, I'm on a 1 year, 1 day. So I'm looking at what's going on, looking at the next levels, right? So I want to see if we go into, if we still continue in our little bull trend in a bear market. Well, here are my levels. My levels are clearly mapped out for me as to where I would want to be taking a position, right? So that's the price action tool. That's Fibonacci. That's price. That's the price levels. So you can map out your support and your resistance and your entry points and your trap doors. So these are all trap doors to the. This is trap doors to the downside, and this is your trap door for breakouts. So you can see where your levels are or where you want to be. Right? So let me map out the lower end for you, which should be right around here. So 406 and 412, like I said, 415. So broke it once here. Down to 115. And then here's below 426, so 406, right? Right here, right here, right here. So we know it can get down there. So what's the risk reward? What's the risk reward for you guys right now? The risk reward to the upside is 427. Next level is 437. So that's literally a $10 move to the upside. How much does the SPY move every day on average with the average true range? Well, it moves around what? $6, right? So we come over here and we say, what's to the downside? Well, we're at 427 right now. Downside is 415. So we're looking at $12. So our reward is $10 to the upside versus our risk is $12 to the downside, give or take, right? So you have to look at it and say to yourself, now this is if you're going to be doing a day trade or a swing trade. We're intraday momentum option scalper, or at least I'm an intraday momentum option scalper. So I have to look at this and say to myself, the risk reward for me right now would be to the upside, depending on what's going on with the market. On Monday, when I look at the market, I could be taking a position to the upside because that's where we're trending. Now, this could flatten out. So if it does, I would be doing a put as well. So I wait until the market opens up on Monday to be able to say to myself, where would my call position be? My call position would be probably around the 430, 431 mark. That's what I'd be looking at taking in a position. And if I was going down the put side, I'd be looking at 425, 424, 423. So there's good liquidity, there's good volume there, and taken on the put side. So I'd be looking anywhere from 427 to 423. Now I could do a put spread as well, but I like to either take either the call or the put side. So I'd be looking at what's going on with the volatility. So in this coaching call here, this is what I want to show you: how to map everything out, how to look at what's going on, how to look at your levels using the channel tool, using Fibonacci retracements, using the volatility box, and using looking at where we are. So we're in a very precarious position right now being traders. This is why I like to do intraday momentum option scalping. I could take a day position, but when I'm taking a day position, I really got to be monitoring and watching what's going on, because everything can open up in the morning and come 11:30 or 12 o'clock in the afternoon, all the positions actually reverse and the market takes a tank. So that's why I want to be in and out on a 2-minute or a 5-minute candle, and then watch those candles and watch the price action, watch my intraday momentum action. So watching the 20 and watching the 200 to see what the 20 and the 200 does. So hope you enjoy this coaching session. If you've got any questions as far as what I mapped out today and what I'm looking at, you can do this with any position, by the way, as well, right? Any stock, any security, any ETF, you can do that. So if you got any questions, definitely send them off to support. And the coaching call made it a little bit too long, but it was good because you learned a lot and you can watch this back again. So that being said, my name is Double P. We'll see you we'll see you throughout the week. Take care, everybody.